Good afternoon and welcome to Stock Market Today, sponsored by Interactive Brokers. It's Tuesday, September 3rd, and we are live from the Investors Business Daily Studios in Los Angeles. On today's show, we're going to be taking a look at global payments that actually held up despite market weakness, but that's not what happened to most names. We'll also be taking a look at New Oriental Education and Veeva Systems. But first, let's take a look at the major market indexes. It's Justin Nielsen along with Ed Carson, and we had a long holiday for the market to think about what it's done and where it's going, and here we are back on a negative day. It looks like the NASDAQ closed down 1.1%. The S&P 500 kind of closed in the mid-range for its day, down just 0.7%. Dow Jones Industrials down 1%, close to 1.1%, and the Russell 2000 was also down about 1.3%. So, 1.5% actually. It came down a little bit more. So we got a little bit of strength at the end, so it didn't close at its worst levels of the day, but this certainly isn't something that looks great either.
No, it doesn't. I mean, to a certain extent, the NASDAQ, the S&P, and Dow, they're all sort of sandwiched. They're between the 50-day line and the 200-day line, sort of the red and white lines there. It's sort of like just sort of trading in there, and that's what it's been doing for several weeks. I mean, over the weekend, President Trump, as expected, did implement new China tariffs on September 1st. Beijing immediately retaliated. Then this morning, what really got it, though, is that the manufacturing index, it went below 50, which is the break-even level. And that was a really negative sign. Manufacturing is a leading indicator as opposed to consumer spending or jobs. And global factory activity has been pretty weak. I mean, we've actually been sort of surprisingly strong on the factory side. So it's going on that side. That's not a good sign. If you're worried about a recession, that is definitely a negative sign there. So, I guess you could argue that, the market is actually resilient in a way because we've had a lot of negative news and not much good. I mean, sometimes some happy talk, but the reality is actual actions, actual data has been negative.
Right, and despite that, it has still held up above its 200-day. It really hasn't kind of solidified its downtrend at this point. Really what we've gotten is that sideways, which can be even more frustrating in a lot of ways.
Yes, it can. You can stay out of a bad market. This one, sort of like these stocks some of them keep on breaking out or setting up, and you think, oh, maybe I'll get in. It's like, oh, that's probably not the best thing most of the time.
It teases you. Maybe this one will work, and then it just doesn't. So let's take a look at one of the stocks that was showing strength today, and that was Global Payments. So this is one that is still above its 50-day moving average line, and so a lot of the stocks that are above the 50-day moving average line right now are showing enough strength, or relative strength, I should say, for their relative strength lines to be at new high ground, and that's certainly the case here with Global Payments. What's going on here?
Well, I mean, it's one of several payment stocks that is doing well. It's actually holding well above its 50-day line, actually gained some ground today. Visa and MasterCard also have new flat bases. There's a lot of flat bases out there because the market peaked about 5 or 6 weeks ago, and so now we're seeing some flat bases show up. But yeah, Global Payments held above its 50-day, but with the major averages slipping again, some of those leading stocks that were above their 50-day now back below it. So this one really stands out, that sort of that blue-purple line down there. That's the relative strength line. That's hitting new highs, showing how strong it's been in this choppy market.
Yeah, and one of the things that's also notable about that chart is there was a lot of volume in today's action. So looked like last time I looked about double what its average over the last 50 days was. So when you see kind of that buying on a weekday in the market, this is something that is kind of trying to buck the trend, but we've seen a lot of that happening lately. So let's go ahead and take a look at New Oriental Education. This is a stock that we've been talking about a lot. It was one of the stocks that was holding up very nicely, broke out recently, but now it is looking like, as a lot of stocks are, the breakout is just having trouble finding traction.
Yeah, I mean, it's just hard. I mean, it's not even its relative strength line. It's still basically at record highs, but the stock is pulled back. I mean, you can be relatively strong and still an absolute loser.
Right.
This is not, I mean, this is doing...
I just didn't lose as much.
I didn't lose as much. And so, I mean, it's not doing terribly. It's just slipped back below a buy point. It's sort of almost a base on base, depending on how the prior consolidation, how you want to look at it. It's been doing well, but it's hard. China's economy is getting hit just like ours.
Right.
So, I mean, it's hard to see. It's just hard to move higher.
Yeah.
It's hard to move higher when the market is slumping.
Yeah, and if you look at that chart that we were just looking at, you can kind of see how there's that band that's being shown on the chart. That's our pattern recognition that kind of shows the buy zone, and you're seeing a lot of charts that the stocks are getting in that buy zone, but just can't seem to get out of it. They stay within that 5% buy zone, but are having a lot of trouble making traction. Now, on the flip side, some of the stocks that we've been talking about that are making bases, Veeva Systems is one. Now, granted, this is a late stage base, case. So that's been one of the cautionary tales here. But it recently had earnings that got it back above its 50-day moving average line, but now it's right back below the 50-day moving average line. So what does that kind of say for its prospects?
Well, I mean, obviously, look, I mean, it could take one or two good days and all of a sudden it's right back above the 50-day line. So, I mean, you don't want to overreact, but fact is it was starting to set up. It's not holding support at a key level, you know, whereas some leading stocks like Global Payments are. And, you know, it's just a situation, the market is weakening. This is why you don't cheat.
Yeah.
You know, it's a market under pressure, and yeah, it was showing some positive signs, but it wasn't really there. It was just showing some initial steps. And yeah, it's just something now, it looks like it's going to take some more time, just like the market may take more time.
Right, and especially when you're looking at some of these later stage bases, this has had a phenomenal move this year, and so you have to start thinking about when is the right time to take money off the table on some of these big winners.
Yeah, I mean, obviously new investors shouldn't have been getting in, but for longer term investors, because this was one of the first stocks to break out back in January, February, so they had a really strong run. You're absolutely right, but yeah, there's always a question: when do you get out?
Yeah. Okay, that's going to do it for us today. We'll see what the market holds for us tomorrow and for the rest of this week as we kind of get used to this new round of tariffs. But in the meantime, if you want to go ahead and take a look at some of the extra stuff that we have, Allie is in New York today, and she was filming another investing strategies. So that's something that you can access at investors.com/investing strategies. She's doing that from the NASDAQ and has a lot of wonderful guests that are joining her. Don't forget to also join us on our social media channels. We are on Facebook, Instagram, YouTube, and Twitter. So you can join us on any of those social media platforms to kind of follow along with what we're thinking about the markets and individual stocks. Thanks a lot for joining us today, and we will see you right back here tomorrow.